Good afternoon, everyone. This is Matthew GS. We are episode 30 of the 5/13/62 EMA strategy. We are currently 16th of February 2025, and it's 3:13 p.m. in the UK. Welcome along to this latest stream. If you're brand new, please do subscribe to the channel and hit that notification bell so you are alerted whenever we upload our videos. So before we dive into the markets, just want to quickly get this over and done with, but we do have a free Telegram group to join, link in the description. We are partnered with FP Markets, so we get to use any lot size in any market. And I am affiliated with TradingView, so if you want to get the 20 alerts with the basic package, feel free to use my affiliate link in the description. And lastly, at the end of the video, we will be looking at the news. And in today's video, we're going to be looking at buy stops and sell stops. And if you do stick around to the end, I will give the answers to the homework that I set from last week, plus some cool updates for the strategy. So let's dive straight into this. Now, looking at gold, I did place a sell stop. So the update from last week was we're going to be moving away from market executions. Now, market executions, they are good because they get you into the market instantly, but I have felt for a while that you can't really work out your risk management properly using market executions. So I've always wanted to find a better way to get into the market and still work out your risk management properly. And after speaking to my trading partner about this, he suggested using buy stops and sell stops, which I have been aware of, but I was so focused on using market executions that I've never really used buy stops and sell stops to their full advantage. So this week was about testing those out, and they are similar to the buy limit and sell limit, as in like you place in an order, you can set your risk in advance, but this works in a slightly different way. So I will be sharing with you how that all works. But before I do dive into that, I just wanted to share with you that I have updated my bearish candles from white to this color here. And it actually mentioned it on CTrader. If you give us a second, I'm gonna just load up CTrader and find out what that is, that color. And I've also changed the 62 EMA to purple. Okay, and just waiting for CTrader to load. But I did test a sell stop straight off the bat, and actually the CTrader is just loaded. If you just give us 1 second, I'll tell you exactly what this color. Oh, it's called cyan, CYAN, and cyan is available on CTrader. So I've got all the same colors on CTrader as well as TradingView. So yeah, all the charts are the same, and it's looking pretty cool. Just deciding for a different color theme, really. But anyways, let's move on to buy stops and sell stops. Got to start getting this sounding right. Sell stops and buy stops. Okay. So a sell stop is where the market, I'll draw this on. So if we set a sell stop here, just for argument's sake, the market, so we've got the sell stop here. Let's say we set our stop loss here like this, right? So the market has moved away. We're setting a sell stop here. We've set our risk in advance. Our stop loss is here. We've worked out our risk management. We're risking 1% of our account, 2% of our account. Happy days. When the market goes past this order here, you are filled into the trade, but we are expecting the market to carry on going lower, right? We're expecting price to carry on going down, basically. If this was a buy limit the other way round, we're expecting the price to hit this order and then carry on going like that. That's a buy limit, right? The market comes down and then goes up. That's a buy limit. A sell stop is the market triggers in here and we're expecting the market to carry on going lower. So in that case, that means that we can use sell stops and buy stops with this strategy and work out risk management in advance. And we have a little time for the market to get to our levels before going in. And I'll tell you how I managed to pull off this sell stop for gold. So we have been bullish for a very, very long time on gold, as you can see, for weeks or months. We've been bullish, bullish, bullish. You've got to expect that we're going to get a pullback or reversal to happen at some point. My target as a TP was this institutional candle here. Okay, so this is the target I had for my take profit. And price, we had the 5 and the 13 EMA crossover here. So I've had the alert go off. So then what I've done is I've set a sell stop there, right? And then so sell stop is here. My my stop loss is around there or there. I can't remember now where I put it, but let's just say for argument's sake, it was there. And my TP was within this institutional candle. So it's nearly a 1 to 2 trade. So then what happened was the next candle that printed, it's gone past our entry, right? So it triggered into the trade. It has wicked back up. This is why we got to have stop losses that are not too tight. So we're going to get into the trade, right? Not get stopped out. So this did wick back up, but then the candle or the market just kept on going lower and lower and lower. It hit my take profit, and that sell stop was a successful trade, which was great. And then if I go to that's this trade here. That is this trade here. So 2,449 pips. It was a 5-hour duration trade. I put 3 lots down. This is in my practice lab. Those were the fees that were taken. And yeah, overall, very good trade for testing out my first sell stop, right? So that is a sell stop. Now, I'm a bit gutted that I didn't actually place a buy limit on this institutional candle, which I should have done, because this would have been a beautiful trade. And what I'm looking to do next week is catch some sell stops down to institutional candles and then place some buy limits on the institutional candles for this exact scenario, right? It's not always going to work out, but in this example, it did work out, and we could have had a buy limit on this institutional candle. So this is one of our entry criteria. Entry 1 is the 5 and the 13 EMA crossover, and then the 13 EMA alert. So this is one entry. Second entry is an institutional candle. So you can see this color candle is different to all the others because they've sold to buy, and then they've pulled the market back down to this area. They've mitigated their positions. They've broken even, and then they carry on the market direction of where they were heading. didn't quite break that high there, but from there to there, that's a 1 to 8 trade. And that stop loss is pretty small. So that would have been a very, very great profitable trade to catch. And I'm gutted that I didn't actually catch that trade. Nevertheless, there's going to be opportunities like this all the time. And it's good to see this visually week in, week out. So that was the buy limit and the sell stop that's worked out perfectly for gold. On the flip side, on Friday, we did have the reversal. I actually think I might have placed a sell limit on this candle here, thinking that the market would come up and then reverse from this area. But I did place a sell limit. So I did actually get stopped out of this trade. So market went higher. There was probably a higher institutional candle up here on the smaller time frames. So, you know, you're never going to get it every single time, but that would have been a great sell to take from the top. What happened was we have had the 5 and the 13 EMA crossover here, and we are going lower. And when market resumes on the Monday, we could have a reaction to the 62 EMA, and then we potentially could be looking for buy stops to catch this market higher from the 62 EMA. So in the past videos, I've bought instantly. When we've got to the 62 EMA, going to stop that now and not buy straight away. We're going to be patient and then wait to see if we are getting some reaction away from the 62 and then get in with a buy stop. So we will see next week for gold. Going to move on to US 30 now. And US 30, has it been good this week? Monday, we did have the 13 EMA crossover. So let's show this as an example for a sell stop. What I forgot to mention is, okay, where do we place the order on these buy stops and these sell stops on these candles? What we want to do is, if the 13 EMA alert goes off and we're looking for sells, we place the order on the opening of the candle. So in this example here, so the 13 alert, EMA alert has gone off. We're not selling straight away. We're not doing a market execution here. We are then placing a sell stop on the opening of the candle that goes through the 13 EMA. So we are placing a sell stop here. Stop loss is best above the high there, and then TP1 as a one-to-one trade would be that. Now this trade didn't actually work out. It was a slow start to the week. Price actually come up. We actually would have got stopped out if we took this trade. I can't remember if I did take this trade, but anyways, it would have been a failure, right? But that is where we place the entry for the sell stop. Now, with this one, we did have the 5 and the 13 EMA crossover. So you could then place a buy limit here, a buy limit there. And I think what I did do actually, we had the 5 and the 13 crossover here. Then I'm thinking, okay, this is probably going to go on a bullish run. Then my 13 EMA alert went off. Actually, let me hide the, just take these off. That might be a bit more cleaner. Yes, the 5 and the 13 EMA alert's gone off. Then I got the 13 EMA alert go off. Can you see how this candle is wicked down here? So the 13 EMA alert's gone off. So I've gone, right, okay, I'm going to place a buy stop. So in this example, we place a buy stop order on the opening of this candle. So it's not this, it's this way for sell. Your opening is this way for the sell, but it's the opposite side for the opening of a buy. So the opening for a buy goes on the top of the candle, the top of the body of the candle, right? This is the opening here. So we place a buy stop there. So the stop loss would go below that wick, or maybe below where the 62 EMA is, and then imbalance target would be there, or the institutional candle here as a TP. However, this one stopped me out because of a news event, because this was a I can't remember what time the news event happened, but can you see this candle just slammed straight through my stop loss? I got stopped out. It's taken out all these guys down here, so I actually got stopped out of this trade. However, when the alerts go off and all the criteria is met, you take the trade regardless. So I've taken this trade and it's turned out to be a loss. Okay, it is what it is. We move on to the next one. But that, if that did work out, then the market would have, because it triggered me in, right? Can you see how this wicked up my orders here? So it's got me into the trade by wicking up, and then it's just reversed. Okay, so then that's a loser. But if it carried on going higher, that's a buy stop. We would have been in the trade because it's just rising higher, right? So that trade was a failure. It's not a problem. Then on Friday, we had all 3 EMA alerts go off. I believe hold on one sec. I did take this trade. US 30. Oh, okay, yes, it was there. So I got in a bit higher. So all 3 EMA alerts, or sorry, all 3 EMAs have crossed over, right? We've had this bullish move. We have reversed from this institutional candle. However, price hit the 13 EMA. So this can hit the 13 EMA and then carry on going higher. So we set a buy stop on the opening of that candle. Long position is here. This is a Friday. Friday's not a very good day to trade. The market doesn't move too much, but I thought, you know what, I'm just testing buy stops and sell stops. I'm just going to take the trade. So the stop loss was around there. TP is, say, this next institutional candle right up here. Then the next candle, it's got me into the trade. See how this is wicked up? I'm in the trade now. Then it's just reversed. Then this next candle has just taken me out. See, my stop loss was around there. This is just wicked down here, and it's taken me out. What it's probably doing is actually going down to this institutional candle down here. So for next week on Monday, this will probably be the reversal zone for US 30, right? And on the Monday, if we do get price that comes into this potential reversal zone and it's showing signs that it's starting to move out, we can then place a buy stop on these candles that are forming, either get in on the 13 EMA or look at some other potential other opportunities to get in so we don't miss this move. But that's what I'm seeing for US 30 next week. I do think we're going to go on a bullish run from there. So I'm hoping the buy stops and the sell stops are starting to make sense. One thing I do want to note with GBP USD and Euro USD is for some reason my alerts, I didn't have any alerts for these forex pairs, these major pairs, which is a bit odd. So I have updated that now. So I've got Bitcoin, Euro USD, GBP USD, US 30 and gold, all my alerts. And just another reminder, you get 2 months of what they called 2 months of active alerts, and then they expire after 2 months. TradingView does not tell you when your alerts have expired. It's down to you to make a note of when your alerts are expiring and then change them for another 2 months, right? So mine, they might have expired. I don't know if they disappear. I don't think they do. No, I don't think it does. I think it just says expired. But anyways, I had quite a lot that were expiring February the 18th. So I've just gone in. You just go to expiry, go in, you go to the furthest you can go, and then you select the furthest away, which in my case was 14th of April. Then you just go set. And then now all these alerts I've got are expiring the 14th of April. So just something to keep in mind to do, right? Now, GBP USD, I was actively looking at this trade because I did place a short position on this institutional candle here. So, where is it? So, yeah, I placed a sell limit on this. I mean, it's a bit ambitious because we are above the 62 EMA, and I mean, I was just testing things out this week, if I'm being really honest with you. And I had a TP as down there, and as you can see, because price moved away, we did come back into this area, and price did go in profit for me, but then it's just carried on going higher, and that was a crazy move. So should have gone in for the buy. I mean, I just went against my rules on this trade, which is a bit frustrating, but like I said, I was just testing a few things out. But if I was to go back in time and do this properly, I would have gone, right, okay, we've had all 3 EMA alerts go off. I didn't actually put, it's probably because I didn't have the alerts on my set, right? And I was just focusing too much on them. And anyways, the 5 and the 13 EMA alert should have gone off. Then we would have got the 13 EMA alert go off. Then this did go into the institutional candle here. It's not always the very, very last candle here. I mean, actually, it has tapped this candle here, because sometimes the selling pressure happens from here, right? It happens it can happen a few candles before, and it doesn't always reach the last candle. So to make sure it's getting the trade, just place your limit order just slightly above. And anyways, this has mitigated its positions. The 13 EMA alert's gone off, but what we could have done, what I should have done, is set a buy stop on this candle here. The candle that has gone through the 13 EMA alert, we set a buy stop on the opening of that candle there, and we go for here. So this is a buy stop. Stop loss would be there. TP, which would have been good, is took out that high. I know we can see it because the data's there, but that's nearly a 1 to 2 trade. Carried on higher. It was nearly a 1 to 3 trade. So beautiful trade for GU on the buy. That would have been a beautiful buy stop to take on this trade. And using these buy stops and sell stops is we can work out, as I mentioned, the risk management, because when price is down here, we're setting a buy stop here. So our order's placed in advance. You can right click on here, you go create limit order, and create limit order. So we go create limit order, we go to stop, and this is a buy. It's not letting me do it at the moment, but you click buy, so buy, stop. You put in the amount you want to risk, so 1% is probably good to go with. Then it'll tell you your lot size you could use for the 1%, and then you obviously can drag your TP. It's already there. Let's see, you can drag your TP, you can drag your stop loss, and then you press place the order. The order's placed, and then the next candle, this candle here, has gone higher. It's got us into the trade. Then the next trade's gone higher and higher and higher and higher, and yeah, the trade's worked out. So that buy stop would have worked out beautifully, right? And then identical thing happened with EURUSD. We've had the 5 and the 13 EMA crossover. We've had the 13 EMA alert go off. So we set a buy stop. We set a buy stop there. The long position is there. So we're setting our trade up in advance. 1% risk. Targeting, just for argument's sake, up here. And then the trade is placed in advance. We've got 1% risk on the trade. If the trade loses, we've lost 1%. If the trade wins as a 1 to 3, we gain 3% on the account. If it's 2% risk, 6% would have been gained if we've won the trade, right? That's risk management 101. And again, this worked out beautifully because the buy stop is set in advance. We've worked out a risk in advance. We've walked away from the charts. Then the next candle prints. It's gone like this. Bang, we're in the trade. We've gone higher, and then it is a winner, as you can see. But what also happened is we did have some more free touches through the 13 EMA. So we'd have got 3 alerts. We could have set another buy stop and stacked this trade for another buy. So another buy stop here. TP, so stop loss there. And then that's there. So another 1 to 2 trade. So hopefully now this is starting to stick in. I would practice on your own charts on buy stops and sell stops, but at the moment from back testing and forward testing, that is where I think is the best place to put the order. So it's the opening on the short candle for a buy, and if you're looking for the sell, it's the opposite side. So for the sell here, it's the, let's just get a better example. So for a sell, so for example here, we've had the 5 and the 13 crossover. All 3 EMAs have crossed over now. This candle's gone whip, it's wicked up. The alert's gone off. So we place a sell stop, and it's the opposite side. It's the opening is on the body is the opposite side for a sell. So we go like this, short, like that. This one was reversed hard, nearly a 1-to-4 trade. So then the next candle prints, we're in the trade. This massive candle just like goes like nobody's business, and that's it. That's buy stops and sell stops, and that was on EURUSD. Last one to look at is on Bitcoin. Bitcoin on my broker FP Markets, we had on, that was on Friday. The trade was a couple trades, I believe. This institutional candle here could have been a sell limit. What's going on? Sell limit. Tight stop loss on that one. And that one actually went to there before it says that was a 1-to-3 trade for a sell limit. Prices moved down. We've come back up to this area. They've mitigated their positions and they've gone lower. I did get stopped out on the Friday trade just because I had my stop loss quite tight, but we had the bit more riskier because we're below the 62 EMA, but we did have the 5 and the 13 EMA go off like this, right? They've gone off the alerts. Then I had the 13 EMA alert go off, so I've placed a buy stop on the opening of this candle here. We've placed a long position, this thing right here. I had my stop loss there. This is why I got stopped out. But TP I did have on the 62 EMA. But price did actually go higher. But as you can see, price did whip me into the trade. And then this candle just took me out. I got stopped out. But then it did work out because it did go higher. So it was a win in the end, but this is why you need to practice and need to have wider stop losses. And then that would have been a winner. That would have been a 1-to-2 trade. And that is this trade here that I took. See how I got stopped out? Which, you know, is what it is. I just learned that I need to have bigger stop loss. And yeah, that's buy stops and sell stops. That's all the markets that I look at. We've covered Bitcoin, gold, US30, GBPUSD, and EURUSD. So very good week in the markets. Very happy with the buy stops and sell stops. Gonna only be using these moving forwards and never using market executions again. I mean, I say never gonna use them again. Who knows? I might use them in the future. But professionals, they set their risk in advance, right? And we're professional traders here, teaching you how to trade properly. And this is how the big boys do it. I did promise that I will show the answers from last week. If you did do the questions that I asked for, just a little bit of homework, just a bit of fun, I'm not going to read the whole thing out, but what you can do is just pause the video. So this is the answer to imbalance. So I just quickly go down. You can just pause it and read it. This is the answer to Fibonacci. And answers to question 4. Answer to question 5, what is a short? Answer to question 6, what is the Kiwi? Answer to question 7, what is US30? Answer to question 8, what companies are in the top 30 companies at the moment for US30? And then what is an institutional candle? And then finally, what is mitigation? So yeah, feel free to pause the video, read the answers, write them down if you want. Let me know if you want more kind of like homework tasks like that. It's always good to learn in all different ways. Finishing up now and just having a quick look at what's in store for the market next week. So Monday, nothing. Tuesday, just looking at red folder news. There's a couple of things for GBP. Yeah, as I'm kind of looking at GBP and Euro, I need to be focused on Euro news and GBP news now, really. Well, and just be mindful of what's in store. Like there's red folder news for GBP, and then there's a couple of red folder news for the US. Thursday, there's red folder news for the US. And Friday, GBP red folder news, Euro red folder news, again GBP, and then some US. So Friday might be a busy one. There's some more red folder news there, so we will see. Appreciate everyone jumping on. Don't forget to subscribe if you haven't already. Appreciate your time, and I'll see you the next one. Have a good week. Bye.